Hello, I'm Jared Nelson, and welcome to Pros and Cons, the show where we take you through the risks and opportunities behind the trending ideas in the market. Last week was a big moment in American history, and investors appear reasonably pleased with the outline of a new $1.9 trillion COVID-19 relief bill. Meanwhile, the Federal Reserve is still buying bonds at the rate of $120 billion worth per month. All these stimulus efforts are flowing into the economy and financial markets and help push major U.S. indices to record highs, including the Dow, NASDAQ Composite, and S&P 500. Some sectors are going through the roof. This week, we are talking about one sector that has been flying under the radar for some time: 3D printing. If you remember, a few years ago, this sector was all the rage. 3D printing, also known as additive manufacturing, is the construction of three-dimensional models with raw materials and chemical compounds. Materials that can be printed include plastics, metals, glass, ceramics, and carbon fiber. Designers first develop the object on computers and then produce the model with 3D printing equipment. This process is fairly portable and flexible, allowing you to print large or small objects. As a result, numerous applications were found for 3D printing, including medical devices, manufacturing components, and electronic parts. You can even 3D print a house. This range of applications totally captured investor imagination. So powerful was the impact of additive manufacturing that some called it the 3D revolution. From 2011 onwards, 3D stocks skyrocketed. For example, 3D Systems, with the ticker DDD, started out at $3 a share in 2010. 4 years later, prices peaked at $96. Of course, those heady days couldn't last, and lofty growth expectations failed to be met. The 3D ecosystem was much weaker than expected. Boom soon turned to bust, and 3D shares collapsed. At its lows, 3D Systems traded almost 95% below its peak. But surprisingly, the sector is heading for a massive revival in 2021. Perhaps this revival was sparked by the disruption in trade due to the pandemic, which pushed factories to 3D printing in order to make customized parts. 3D printing was also used to make key components in respirators last year, revealing the process's versatility. While the sector slipped into a bear market during the last 5 years, the technology behind 3D printing has not stopped advancing. Much progress has been made, and the original thesis of upending the manufacturing process through customized construction, decentralized manufacturing, and portable parts making remains intact. What is more, this sector has been overlooked for some time. There is no great investment froth at this point. Note this: 3D Systems' first 3 weekly returns this year are 124%, 20%, and 22% respectively. At $34, prices are nearly 6 times its September lows. This is not a single stock phenomenon. Other stocks in the 3D sector are also showing the same bullish trend, including Stratasys, X1, and Proto Labs. According to Trackstar IQ, our proprietary search tracking tool, we can see growing institutional investor interest in these stocks over the past month. There is no doubt that the 3D sector is in the early stages of a cyclical upswing. Take a look at the ARK Invest-sponsored 3D printing ETF. This is a specialist ETF that invests solely in 3D stocks. According to its December fact sheet, the fund's asset under management is just $132 million. This is a small fund, which tells us that there is room for further capital inflows. From the technical standpoint, however, the sector may be vulnerable to a short-term consolidation. Long-suffering shareholders are likely to use recent rallies to lighten their holdings. Moreover, the overall stock market may dip in the next few weeks as the rally from November lows looks overbought. Still, the sector appears to be medium-term bullish. If prices do consolidate, investors should be ready to pounce on the sector with reasonable position size and stop losses. That's all we have time for this week. To find out more about our Trackstar IQ data, sign up to our free newsletter at investingchannel.com/Trackstar. Remember, make sure you do your own due diligence before making any investment decisions.